If you've just got into trading, where the heck do you start? Stick around. Hey guys, well, welcome to you. All right, so welcome if you are a new trader. Unusual actually to get new traders coming to the channel. I kind of tend to attract guys who have been in, I know the score, gone through the mill, and are kind of trying to find different tactical ways to deal with discipline issues and mindset, and maybe sort of tweak some strategies and kind of stuff. So appreciate you being here. And subscribe if you haven't yet. Like this video if you like this kind of video, and check out, I've got lots and lots of videos, lots and lots of stuff to talk about. Anyway, let's get straight to the point. I think the best thing to do as a new trader is to, number one, pick a market and observe that market on the time frame that you're most drawn to. So what does that mean? So you've got scalp, swing, day, pretty much. Scalping is very aggressively 20, 30, 40, 50, 100 trades a day, in, out, in, out, in, out. Day trading is intraday trading again, so you can be flat at the end of the day, but you kind of do maybe 3, 4, 5 trades a day, that kind of thing. Swing trading is where you're holding trades over a period of days, and that could be 1 day, 2 days, multiple weeks. Different types of strategies. What resonates with you the most is the first thing to think about. And the second thing is what fits in with your lifestyle. If you've got other things going on, you can't day trade. But if you like the idea of day trading, like, okay, I want to do day trade. Let's say that, for example. Right, that's the first thing, box ticked. Now you say, what market should I trade? Again, there's an operational perspective here to look at in times. And I've done videos before, I talked about which market potentially to consider, depending on what times you've got available. But the big markets that most people will trade if they're day trading are going to be the indices. So if you're in the UK, US, Europe, you're going to be looking at the DAX. You're going to be looking at, maybe not the DAX as you're in the US, you're going to look at the DAX is the German index, FTSE is the UK index. Don't bother the FTSE in my opinion. I think the DAX gives you everything you need, unless you very specifically want to trade the FTSE. In the US, you've got the NASDAQ, the Dow, the S&P 500. Dow is a big favorite for guys who are spread betting or trading with CFDs. If you're trading futures contracts, they do a mini Dow as well, mini S&P, so you can trade on a smaller size. Those tend to be the go-to indices. Some people also like to trade things like crude oil, gold, silver, not so much day trading silver, and not so much maybe day trading gold, but crude oil as a crude oil trader actually trades oil futures contracts. But that's a good place to start. If you like currencies, big ones, Euro, USD, Yen, cable, which is pound, US dollar. These are kind of generally a lot of people, I think the way it tends to work is guys who get into trading from the US get attracted by stocks. Guys that get interested in trading from the UK and Europe tend to be drawn in by Forex, mostly just because that's the thing that shouts the loudest in the marketing and all that kind of stuff. Forex is a great place to start. It's a great place to learn. The plus side of Forex, let's start with the good things first, is 24/5. So it trades all throughout the night and all throughout the day. So whatever time you've got available to watch the market, you can do. There's some downsides of that because, you know, sometimes the ranges are a little bit low and you can get sucked into noise, but it's a kind of a good broad thing. That's also a negative though, because you're always looking at something. If you're trading a stock, for example, we'll talk about stocks in a moment, but something that closes, so to speak. The indices, most of the time, by the way, guys, Dow and DAX will trade throughout the evening. They're much less volatile than the underlying market is closed. So you've got your indices, which are your Dow, your DAX, your NASDAQ, etc. You've got your currency pairs, loads of those, some exotic pairs as well, but I kind of talked to you about my 3 main ones. You've got commodities, again, crude oil, probably a better one for day trading. Then you've got stocks. Now, stocks are a very, very interesting thing to trade because you have a variety of things. They move depending on how volatile you want them to be. I personally prefer US stocks to UK stocks for the volatility, the volume, etc. You can choose from whatever you want. Now, there are some downsides to stocks in terms of some of the spreads, some of the margins, some of the commissions, but trading stuff like Apple, Tesla, any of these kind of big things, Facebook, Netflix, you get the idea. You know, any of those, it can be okay because they have the volatility there, spreads are okay, there's enough to make something on. But I think if you're starting as a new trader, avoid those for now and just focus on either the indices or the currencies. That would be my preferable place to go. I'm a big fan of the indices, but that's a personal preference. I wouldn't suggest either of the other. You go what you think is best. And then you kind of look at the market. So once you've done all that long-winded way of saying pick your time frame, pick your market, observe for a bit, observe for a bit and just go, hey, what do I see? And you're going to see nothing. That's the way it is. You're going to say, "Oh, the market goes up and down. I don't really like looking at the chart." Well, fine, but just observe. Give yourself some time to observe and watch, and just understand obviously the basics of what the candles shapes are doing, the colors and the price axis and all this kind of stuff. And there's plenty of other stuff out there, material. I don't go into the basics that much. I talk about some things, difference between candles and bars and stuff. You probably find a few good videos from me, but I'm sure there's probably others who perhaps do it a little bit better. Kind of pushing people away from the channel here, but hey, I want you guys to get the kind of best quality you can. And yes, whilst I do cover some of the basics, there's probably others who do the basics better. I'm better at this kind of stuff, a little bit more advanced, more intermediate stuff, I think so. But anyway, get the basics down, then just watch and observe and go, okay, what am I seeing? What am I seeing when price gets to these interesting levels? So if we very quickly draw our price chart here, let's imagine that's the prior day high. We're talking about day trading again. That's the prior day low. What happens when price gets to it? This is the things that's worth watching. So when price starts to get to it, what do you see? You see, how do you see the price move? Does it speed up? Does it slow down? How does it move? What happens when it retests the current day high? How does it react? Watching at those levels is a very good way to get a feel for price. Prior day's high, prior day's low, current day's high, current day's low, yesterday's close. Those are the kind of the big main levels as a day trader that are worth watching. Don't worry about support and resistance yet. Don't worry about your channels and trend lines and all that stuff. Just watch how the market trades around that, because you'll start to see the difference between a breakout, which is something that pushes through a level and continues, a fake out, something that goes and then reverses. You'll start to see all these little differences and nuances. And then you start to build a strategy. You go, hey, you know what? I would quite like fading moves. I've got a natural instinct to want to sell a market that's going higher. Good. Now we're getting somewhere, because at that point you go, right, well, now I need to look into what's called mean reversion strategies. So mean reversion strategies are when you're selling something higher or buying something lower for it to come back in. So an outside in type strategy, you're looking for it to come back to a mean, whatever that mean may be. And there's indicators out there like moving averages, volume weight average price, etc. Don't get into that yet. You say, okay, I quite like trying to find a top and shorting it back for a move into the middle, or I quite like to find lows and push them back up. Great. Mean reversion. If you're more a trader who likes to get involved in momentum type stuff and breakouts, the momentum trend following strategies probably suit you better. We tend to have a tendency to go towards one or the other. That's not to say that further down the line you won't decide to do a mixture, but what I want you to really do is to focus on the market, the time frame, and the type of strategy. And just spending some time observing will really put you several steps ahead, because you go, right, okay, I like trading mean reversion on the NASDAQ. I'm a day trader. Great, you are ahead of the game. If you stay focused on that, now you can research everything you need to know about mean reversion strategies intraday on the NASDAQ. Understand how the NASDAQ moves, understand the constituents, understands the weighting, understand the price action, understand how it responds to gaps. Go and study the NASDAQ as if your life depended on it. On an intraday basis, print out the charts, see the difference in kind of different styles of day, trending type days, one from high to low or low to high, rotational days, choppy days, all just kind of categorize them in your do a screen share or screenshot, should I say, put them in a folder, print them out, whatever it may be, and just start to observe. You just observe. You say, I'm just becoming an expert trader in the NASDAQ. I'm going to become an expert trader in the NASDAQ. Mean reversion. Look for the strategies. Look to work out how to spot some of these mean reversion type plays, how it kind of stretches to highs and rolls over, how then you can maybe add some additional tools to help you. Don't go crazy with the indicators would be my tip, but if you need one, maximum two, you're going to really have to justify it, in my opinion, to have two on there, but pure price is always the best to help guide you, then fine. So you've got your time frame, your market, now your strategy, and then just stick with that for a while. You will feel like, hey, I'm not making any progress, right? I'm losing money. Stick with it. The trap that a lot of traders fall into is they go, oh, that's shiny, let me go over to there. Oh, I quite like trading that instrument. Oh, look at that guy over there, he's making a lot of natural gas. Oh, options, oh, stop. Just focus on one thing. There is an unlimited amount of ways to make money in the markets, guys. There are arguments to suggest that one is better than the other, and everyone's got an argument, but what I can tell you is that there is always somebody trading the thing that you're trying to trade and doing well out of it. So if you're focusing on day trading the NASDAQ, etc., there will be hundreds thousands, hundreds of thousands, if we look at the world, of people who are doing very, very well day trading that. So, you know, there's no reason, generally, unless you pick some really obscure market in an obscure way and say, hey, I like trading breakout trades in some exotic pair in the middle of the night. Yeah, well, if you're doing that, then there's probably no one doing it because the spread's too wide, there's no volatility, etc. Anyway, point is, if you keep the major things, you keep the major approaches, keep the time frames, you can become good at it, and just focus on that. That would be my advice if you are a brand new trader. Take care. See you next one. Bye bye.